Welcome to another episode. Today we're going to talk about the stock market and why it has been performing so good despite everything that's going on around the world at the moment. We have conflicts in the Middle East, and the gut feeling is that the stock market should have been hit harder than it is. So we need to take a deep dive here to really learn and understand what is affecting the marketplace and why the market at the moment is actually performing quite good. So the first thing you need to know is that the markets are always forward looking. So despite everything that's going on, the people who owns shares in different companies are still looking long term, and hopefully they feel from their perspective that the long term perspective of this company will not be affected by the macro events at the moment. So basically, what they do is believing long term that the holdings they have will perform and not be too affected. In that, obviously, they believe that the conflict will not escalate too much. So it's always a bit of a gamble when you invest because you can't really foresee the future 100%. So this is basically you have to have some belief. And if we look at conflicts that has been earlier, the marketplace has always recovered one way or another. So if you don't have to make money short term, it's usually the best thing to just relax and don't get too much anxiety about the current situation. For example, we have the Ukraine war 2022 with a lot of media coverage, exactly like the situation now in Iran. And obviously, a lot of things went down, but the marketplace still recovered amazingly good in terms of the big indexes like the Nasdaq and the Dow Jones and the S&P 500, etc. So that is just one recent event, but the same happened back in the days in the 1990s after the Gulf War. Obviously, the market went down for a bit. The oil prices were getting a lot higher, but after 6 months, the market returned and started to climb back. So even things similar to now that has happened before has in the long term proven us that being a long-term investor has paid the investor back in dividends big time. So that is what people who are investors and that own the big money, they feel long term that the money anyway will grow, and usually the conflicts are getting solved one way or another. So basically, the Israel-Iran tensions that has been growing a lot lately. To this date, not too too big damages on infrastructure has been done, but we don't know what will happen. But at the moment, we don't have that massive impact, and that's why also the marketplace hasn't reacted too negatively. We should also know that media always has attention, conflict, death, escalation. So we maybe as a human being we feel more anxious about the situation than the marketplace and the big dogs with the money. They are just objective in terms of how much will the cash flow of this specific company be affected by the situation. They are not feeling their way in the stock market. It's very calculated moves. Even so, more nowadays with all the AI tools and data tools and other things that help you be objective in the market. And we should also know that the marketplace always price in probabilities long term. So basically, if not real economic situations occurs that specifically impact the companies, like for example, a shock from higher oil prices push the inflation long term higher. That leads to the central banks increasing the rates. If things that do not happen, then obviously the market and the stock market would not be too negatively impacted. Even if the media affects the public sentiment, it doesn't has to affect the stock market and the capital flows from where the money comes from long term. Um, we should also know that big money like hedge funds, they always hedges the risk even before conflicts. They do not panic. They always have a plan. They have different scenarios already ready. When you have billions of dollars in investments, you already know that different possibilities might happen and have a plan to react before you get emotional. So being strategic long term will always help you to keep your focus on your goal, and that is making more money. And through different long term plans and actions, depending on what's happened in the world, these fund managers or hedge fund managers, etc., can make money long term and staying quite emotional, clear, and focused on their main objective. So, yeah, they use statistical models, etc., when wars break out to weigh the probabilities and uh, may use that data in their bigger aggregated AI models to come to a conclusion how they should invest, for example. We should also know that all wars do not lead to recessions. So sometimes it's a lot just because terrible things happen with human lives. If human lives, if the war do not hit like energy supplies or global trade routes, we will not necessarily have a recession. So that is what's happening at the moment. The economic system can function quite normally. So some historical evidence in this is like, as we said, the Russian invaded Ukraine 2022. The stock market was down, but lately rebounded. Same with the US and Iran drone tensions in 2019. Also the Gulf War 1990 and the 9/11 attacks 2001. Even though the 9/11 attacks we had uh, a bit longer effect based on the global shock from the situation, but the marketplace actually rebounded eventually. So if you was a long-term investor, it was a good time to buy stocks during that event, for example. So this means basically that you might feel very anxious when things are going around macro events around the world, but it's very hard to analyze as an investor. Like if you're an investor at home, just investing yourself, it's very hard to analyze macro events, and based on that, just place your bets in stock market. It's much easier to be a long-term investor and base your investment on companies' fundamentals rather than trying to analyze and guess the macro events' potential effects on the stock market. That is almost an impossible feat to do. Even it's even hard for fund managers, etc. That is why they hedges their risks with different kind of financial instruments long term to decrease the probability of losing money. But we should know that there are one thing with this conflict that makes me a little bit nervous, that really can affect the stock market long term, and that is if the conflict hit the Strait of Hormuz. So this is basically an area of water that connects the Persian Gulf with the Gulf of Oman and Arabian Sea. So about 20% of the world's oil flow go through this area. It's Saudi Arabia, Iran, obviously, and also like the UAE, the Kuwait, Qatar, etc. So a lot of the biggest producers of oil are using this strait, the Hormuz Strait, through and to provide oil for their customers. And obviously, if the war gets tougher and something happen here and the conflict escalates, that and it affects this area, that can push the oil prices really high really fast, like maybe doubled in price. And if it's something happen long term with the Strait of Hormuz, we do have a problem for the stock market, even for tech stocks, because if oil prices surges and it continues to surge, some areas of the economy will actually be hit, because you can't just um, compensate for that easily by other oil supply without the price going higher. So basically, shipping insurances, freight costs, etc., will become really expensive. So it will be higher logistical cost for companies, and this will obviously add a lot of inflationary pressure globally. And if that happens and that inflation gets sticky, obviously, at the moment the market foresee a cut from the Fed, maybe one cut this year. And obviously, if the inflation gets sticky, that won't happen. And maybe the Fed even needs to higher their rates, where if you loan money from the Fed, you will have to pay more money for that loan. That means that is the real um, effect of hiring the rates, basically, because the Fed is um, a bank, a bank that can print money anyway. If that happens, if the rates get higher from the Fed based on these specific events and disruptions of Hormuz, that probably won't happen. But if it happens, then even tech stock will be hit, and the big indexes can be hit pretty hard. So that is actually something that you as an investor in the moment should keep your eye on if this conflict really escalates. The thing that makes me think this won't happen is because USA is actually allied with Saudi Arabia and UAE at the moment. So they will not let the war, and they won't let either Israel or Iran affect the trade here. That is what I think, because money talks, and yeah, probably they USA will do everything they can to not let that happen, to not let the Strait of Hormuz get affected by the war. There will probably be peace talks before that happens, but we should know the risk if that happens, both short term and long term. So how could it affect the stock market? Well, maybe if people get anxious and the rates get higher, we could see some flows into gold, into US treasuries, into the dollars, and maybe Bitcoin. And yeah, equities drops like the stock market. And yeah, especially stocks in transportations and in industry that will get firstly affected by the oil prices, but also tech stocks, because higher rates means higher borrowing costs, and they can't grow and can't attract as much money to their companies. So that was what happened during the later stages of COVID-19, where we saw a lot of tech stocks, especially small cap tech stocks, get really destroyed. They couldn't attract money and investment anymore because the inflation were too high for too long, which really crushed like the Russell 3000, 2000 indexes, etc. And a lot of the companies there has not even rebounded yet. So you should be careful when you invest. And even though it's very hard to analyze macro events and make money based on them, long term, if you really feel anxious about the situation and your specific analyze of the situation means that, for example, something will affect the macroeconomic trends long term negatively, then maybe you should be careful. In the end of the day, it's your money, and you need to do your own due diligence, your own analysis. You can never blame anyone else for the investment you do. So that is something to keep in mind. Take 100% responsibilities. Don't just trust anyone on the internet who says, "Oh, investing that long term is free money." It's never free money in the stock market. It's always some uncertainties in your investments. And yeah, that is important to understand and remember. So yeah, that is what I wanted to talk to you about today, mostly.